Welcome to Markets Now. I'm Michelle Roque with Ken Beadle, Paradigm Futures. We are seeing steady to higher grain trade this morning. We've been mixed over in the livestock futures. And Kent, let's talk about the grain trade as we come into the morning. Obviously, the Commitment of Traders report did show that funds added to their short positions in just about everything. So wheat's the leader today. Is that just short covering, or are we trying to put in some weather geopolitical premium?
A little bit of column A, a little bit of column B. The weather premium is definitely going into the marketplace. Southern Plains rainfall has been disappointing over the last week or so. And the forecasts right now have actually gotten a little bit drier for Kansas and panhandles of Oklahoma and Texas. We need to see some rain down there, as it's just been a drier last couple of months. We've also got issues in other parts of the world. It's been a little too wet in parts of Europe. It's getting hot and dry in the Black Sea area. So all of those things are giving us a little bit of help. Certainly, we still have the geopolitical underlying issues between Ukraine and Russia, and lots of military activity going back and forth between those two. It hasn't made a big difference in exports out of Ukraine, but 60 Minutes had an article or a story last night about the thousands of landmines that are on agricultural land in Ukraine and how many years it's going to take to clear those. And so, that reduced production out of Ukraine, which is down about a third, is likely to be with us for a very long time, no matter what the outcome of the war.
Yeah. And we mentioned, wheat higher, maybe pulling corn and soybeans along with it early on, but we're just steady now in corn and soybeans. And really the biggest problem in those two markets is that when we get up into resistance areas, we just cannot take them out on the charts, right?
Yeah, the soybean market and the corn market have been tethered to the 50-day moving average for the better part of a month. And really the last 20 to 22 trading sessions, a very high percentage of those sessions have had within their daily range a touch of that 50-day moving average. We can't seem to get a close above it, or if we do, it's transitory, and we ultimately end up dipping back below. I think some of the bird flu concerns in the cattle market have soured the speculator a little bit, and that has resulted in their increase in their short positions, and have really kept the market from rallying the way we kind of feel that it could and that it should.
Yeah, no, I would agree with you. That has definitely had an impact. We are also going into a report on Thursday, and not that we're going to see major changes, but we're likely to see some squaring ahead of that too, right?
Yeah, I think so. And if you take a look at the average trade estimate, which is about 2.1 billion bushels in corn, that's down about 70 million bushels from the last estimate. And you're going to get there with maybe 50 million more feed and residual usage, and maybe 25 million more ethanol grind. I think that's those are minimum numbers that we might see. I could make a case that exports could go up slightly as well, and that the ethanol grind could actually go up a little bit more, that the feed residual usage could go up a little bit more. But those are where the average trade estimates are, and I think that's probably fair for Thursday. Soybeans, on the other hand, they're looking for a small increase in ending stocks, just 4 million bushels. And you'll get there with a small increase in processor, soybean production, and probably a little smaller export number is what they're looking for on Thursday. So this is a market. This is a report that doesn't often offer a lot of surprises. The much bigger report, of course, is going to come in May, when we start to get the new crop balance sheets on the books.
Right. Although we will get South American numbers, and CONAB comes out with their numbers the morning before, or early that morning. But what are the basis levels in Brazil telling us right now about that soybean crop? It's been interesting, hasn't it?
Yeah, it has for a number of reasons. First of all, your total exports out of Brazil so far this marketing year are down about 1.6 million tons. So you might initially think, well, that must mean that demand is lower. But if demand was lower, you wouldn't see the strength in the Brazilian basis. The Brazilian basis has probably rallied 75 cents to $1 off of the lows made in late January. So the other explanation is smaller farm marketings, and then the only question is, do we have smaller farm marketings because the crop is smaller, or because they just don't like the price? And that's the argument within the trade right now. In our view, we think the crop is a little smaller, and but we'll have to wait for CONAB again to see what they have to say. There was a private estimate, a week and a half ago that suggested that CONAB needs to come up on its acres, and that might get you to the USDA estimate. That will be probably the most widely watched statistic on the report on Thursday.
Yeah, absolutely. I think that was Agro Consultant. I think it was like 156.5, but that was up about 4 million metric tons, to your point.
Yep.
The other thing that I want to ask you about is the veg oil market, because soybean oils had a really good rally. That's helped us support soybeans, but world veg oil prices are starting to back off a little bit, aren't they?
Yeah, it's been interesting. It's been led in palm oil. And, palm oil prices made new highs last week, early in the week, and then has been subject to some profit taking here as of late. There are some production concerns going forward in that part of the world with La Nina starting to rear its head. And, there's also been, a lot of concern about whether or not Indonesia is going to allow exports in the market, because they're trying to maintain economically inexpensive product for their local consumers. So all in all, it's helped bring the soybean oil market up sharply over the last few weeks. But as we approach 50 cents, it looks like we've had some profit taking kick in. We should note that amidst all of the other ag commodities in the U.S. that have seen the funds getting shorter, the managed money position in soybean oil actually moved to a positive number from short over 50,000 contracts, and that's happened only in a few weeks. So you've seen some real good speculative buying in bean oil.
That's a nice segue into my next question, which is, we have seen some buying in the broad-based commodities, the metals, the cocoa, sugar, whatever it might be. When do those funds start buying over in the grains, or do they?
Well, I think what you ultimately see is a delayed reaction from commodity prices like energy and metals going up to where the grain markets go up. Ultimately, it becomes a sort of a normal thing, because as energy prices go up, for example, you start to increase margin in renewable fuel production, for example. And as commodity prices go up generally, you also start to see passive investors start to have interest in gaining exposure to something in an asset class that is different than stocks, because as commodity prices go up, oftentimes equity prices are not going up, and that's because of the higher value of interest rates and the like. So we'll just have to see. I think that eventually they will take some interest in the grain markets, especially if we start to see the balance sheets tighten up a little.
Yeah. All right. The cattle market, live cattle are trying to hold on to some gains. Feeders are lower, but obviously we had a tough week down in both markets last week with the HPAI concerns. These rallies, can they be sustained here until we get more confidence in this market?
Well, I think were in the midst of some speculative liquidation once again, and they had rebuilt a fairly sizable long position, the speculators had. And obviously, the kind of news that we had last week, their reaction to that news is to sell now and ask questions later. If we actually start asking the questions about what is the impact of this disease actually going to be on cattle, and what is the impact likely to be on humans should human beings be threatened with this, the scientific answers to date have been that this is not going to be a real big deal. And we still have some fundamentally tight, supply situations coming up here in livestock. So, we're just in a liquidation phase, and I think for a while it'll be tough for the rallies to hold, but eventually we're going to find our footing.
Yeah, and in the meantime, some of those fund traders are going over into the hog market, pushing us into new contract highs.
Yes.
Today we're setting back. We're seeing a little profit taking finally.
Yeah, but not a whole lot at this moment. Down about 50 cents in the June. I would note that with corn prices where they are, meal prices where they are, and hog prices where they are, we put another $5-6 ahead in hog production last week, and It's certainly a great opportunity for hog producers to try to lock some margins in, and we were recommending that they do that on this rally. But the funds are believing that the what if situation in cattle is going to put some additional demand into pork, and they've been obviously quite active in buying hog futures here as of late.
No doubt. Thanks for joining us, Kent Beadle with Paradigm Futures. That is markets now. And remember, futures and options do have substantial risk and are not suitable for all traders.